All right. Morning, everyone. Let's kick it off. All right. Last night's session in the States, you can see there S&P and the Nasdaq, very positive sessions, and all the major indexes up over 1%, and really finishing on their highs. You can actually see how it kind of made a little spurt in that last little 10 minutes of the day or so. I think important that we're able to continue some sort of rally. The thing is, and I think what the real negative part is that we really got no follow through overnight in Asia. We'll talk about that in a minute. You can see there, the diversifieds, the conglomerates, and industrial goods and things were the strongest on the day. So we continue to get a little bit further into U.S. equity season. With a bit of a mixed bag overnight. We had IBM and Google, which both reported after hours, which is a little bit softer. But the previous day we had seen some really strong numbers with Yahoo and some of the other guys. We also had Janet Yellen. I was just speaking yesterday, and they had the release of the Beige Book. It was still pretty dovish. There was one piece of the statement that was moderately changed, that was slightly more bearish or slightly more hawkish, and that was simply pertaining to her comments surrounding weather. She talked about in their previous statement how weather may have had a significant negative impact in her previous statements. And then in her statements last night, she said it appears that weather did have a very significant impact, a negative impact on the previous months, essentially meaning that they see that the previous month's data was the only reason it was as weak as it was simply because of weather. And the guys tear apart those Fed statements and the comments out of the Beige Book, and that came out making her look slightly more hawkish. So we'll take that little grain of salt going forward and try to plug it into how we react to things. If we look, let's move forward here into Asian session. Like I said, very little follow through in the Asian session as of this morning, and really I think that has to have people quite worried. When you get the U.S. to rally like that and you get no follow through, it's obviously quite it's quite worrying. And we talked about yesterday how it felt like a rally in the States would actually probably have people more nervous than anything. You kind of almost want to see it correct and base build for a while before it actually moves higher, because it seems to really signal us a turn with some of the heavy volatility and liquidations, especially in the tech shares. So we've had a real disconnect as of late between Asian markets and U.S. markets, and I also think that's really important. When you start to see the total breakdown and correlations in equity markets, then I think your ears have to stand up a little bit, and you have to take note of the fact that things are changing, and typically that signals higher volatility and things like that. The other thing that we had overnight out of China was that they came out and lowered reserve ratios in some of the smaller some of the smaller banks. That's why you had some of the banks that outperformed overnight. There's a lot of speculation that there's either going to be more stimulus that's going to come, or they're going to come in and they're going to curb some of the property. They're going to do away with some of the property controls that they've had, because the lending there and the property market is really starting to take a beating. So, like we said, it's still, I think, in our minds, maybe one of the most important things in the market at the moment. We're going to continue to follow the Chinese story as closely as possible. Here's an interesting little chart from Richard Bernstein, and what it shows is the percentage of companies with negative earnings surprises by region, and you can really see there that the emerging markets, and particularly the BRICS as well have really led the charge with the negative earnings surprises, and the U.S. has actually had the best earnings as a result of compared to expectations. So that's really interesting. Until I saw that chart, I would have had no clue about that, and I think that says a lot. That emerging markets are starting to struggle. We had seen that rotation out of emerging markets, but this sort of thing continues. We'll probably see that persist into the near term. All right, let's look at corporate action out last night. Like we said, we had IBM, we had Google. Both were a bit soft. American Express, which was a bit of a mixed bag, better on the bottom line, a bit of a miss on the top line. Then we've got a huge spate of some of the big boys out today: General Electric, Schlumberger, BlackRock, Union Pacific, United Health, Morgan Stanley, Philip Morris, Pepsi, and Goldman Sachs. So we'll wait and see how that pans out. But I think it changes the focus of the market a little bit as we start to get into the meat of earnings season. Markets can be very controlled by a couple big beats or a couple big misses, or a couple, more importantly, probably some surprise statements out of some of the CEOs of these companies in their conference calls. So I think that's what we're going to pay more attention to in the near term. Obviously, we know we've hit a bigger patch of volatility, some heavier selling in the past, or some heavier movements in the indexes as of late. I think this could really also serve to exacerbate it if there's some surprises. All right. Key factors out today. We had Japanese consumer confidence, which is a touch soft. More or less in line. We've got German PPI, or we had it just a little while ago. Sorry, I haven't seen it as of yet. We've got initial jobless claims, which is the only thing probably really to pay attention to today, as well as Bloomberg Consumer Comfort and the Philly Fed Business Outlook. All right, let's get into the maps. Okay, so the first thing, I'm not going to go through any more indexes today. At the moment, so we've kind of slightly moved away from all the real worry points at the moment, unless we have some big moves in the indexes today. First one I'm going to look at is Billiton's. This is Billiton's essay. The reason why I want to show this is simply because we've entered into this little consolidation. We're moving out to the right. If you look over here, it looks very similar to this sort of pattern where we saw this consolidation. Obviously, we ended up, after moving slightly down, we ended up breaking out to the upside here of this pattern. I think this is significant simply because if we move to the top end of this pattern above, call it 342, we move through 342 to the upside, then this little potential head and shoulder setup is you can write it off. And if we drop to the downside, I would say below 335, then we very much enter into a bit of a head and shoulder setup. So there's a tight little range there. It's only $7. It's 2%. To hit either side of the range. In Billiton's, you can expect to see big moves or those kind of moves in a day. I wanted to point that out because I think a move to either side of that could potentially mean important things for Billy's, at least over the next week or two, and you could probably see a significant move to either side after that. Just one thing to add here, guys. Kumba Iron Ore cut to sell versus neutral at Citigroup. Just saw on the terminal here. Okay, the next one I'm going to look at is Sanlam. Like we said, you got to be really careful of this one. It's very controlled by one trader in Cape Town that just pretty much trades this thing in size all the time. You can see here that it's really just fighting for this 54 level, kind of making a bit of I wouldn't even call that a flag because it's too steep of a pullback. But bottom line is we've pulled back. We've tested, let's see, 1, 2, 3, 4, 5 days, 6 days, call it, in a row at 54, and we've held it every single day. Whether it's just on a closing basis, but either way, it tries to push below. It can't hold below. This is significant. I think as we build, and the more days that we hold 54, the more likely it is to turn to the upside. So we'll watch this play out. I think this one is probably going to be ones that you want to buy at some point, simply because the setup's been very bullish. There's earnings there to support it as well. So we'll continue to monitor this one closely as we move along. All right, Foschini, we're going to look at Foschini on a 2-year chart. I know we talked about this before, but it's come right back down to the breakout point As you can see there, let me just take it all the way up to the top here. You can see there it's come back to test the level where we broke out of from resistance. What was resistance now becomes support. We bounced really hard off of it when we tested it in early April. We come back down and we test it again. I haven't been a huge fan of any of these retailers, especially some of these clothing retailers, but they seem to have turned a bit of a corner, at least in the short term. And this thing could possibly worth a bit of a look in. I actually had a small nibble there yesterday at the close. I won't look to add anything to it unless I see it start to trade a little bit better. All right, next one we look at is Mondi. Mondi also, Mondi a little bit differently, probably more like Sunlum, has been incredibly strong. You can see here, came down and tested trend support. I'm going to zoom forward here a little bit so you can see this more clearly. But you can see there, the day before yesterday, we kind of dropped trend support, but only by a touch. And then yesterday, we really regained it with a solid close. It's also, trends, if you look at this over time, you can see how much of a guide this is. Every time we got close to the 200-day moving average, and this runs all the way back over the last 2 years, every time we get close to the 200-day moving average, it finds support, it starts to push higher. It's been incredibly consistent, and it's been one of the more bullish patterns in the market. Obviously holding trend support here. I think that this one could be definitely a decent stock to have a look into if you like to play the long side of the market here. Another one that's been really strong over the past couple years is this one. That's Aspen. We actually look at this in a 1-year chart, look at it a little bit more clearly. It's really been making a bit of a bull flag over the last a full month and a half. So it's kind of lost its luster to an extent just because it hasn't really been in play. It's been in a sideways drift forever. But look at the amount of time that we've put in this range between for the most part, call it 250 and 280. We've spent in that range mostly inside that band all the way back to September of last year. We're looking at 8 months here, and this is a beautiful little bull flag that we're creating here with a potential, I think, to make a breakout here and move up to about to the 300 or north of 300 level in Aspen. Same sort of thing. If you back this thing out, let's look at it a little bit longer time horizon. It's also been incredibly well supported. Every time it gets near this 200-day moving average, it manages to make a bounce. Obviously, you can see there the 200-day is starting to creep up toward that flag. So I think if we move up to the upside in Aspen, which would really be through, call it 277. If you got the 277 handle, I would say it's up out the top of this flag. I think it's maybe worth a nibble. And the last one we're going to show is Twitter in the States. We're actually going to look at this at a 1 year. Why does that look so funny? Let's look at it at a 2 year and then. Okay, well it's okay. It's just not giving me the full year because it hasn't actually had a chart for that long. But what I want to show you here is U.S. stocks. We're going to start to do a little bit more on the U.S., especially U.S., U.K. I mean, U.S. has become so in play at the moment simply because of these tech shares. There's going to be a big opportunity there. You can see we really come down, tested the low, the all-time low, which is not very long, obviously going back about five months, but the low since the listing at $40. And really it's made this huge flag into that level, going all the way back from the peak up in the end of December. We've pulled back significantly, very significantly. In fact, we broke out of it we broke out of this downtrend on Tuesday. And then yesterday's action in the States, we obviously came back and we pulled back. We sort of tested what was resistance, now support. It held up, on a closing basis. And I really think this is a nice little nibble on the long side potentially. I know the NASDAQ could continue to remain under pressure in the near term, but I think the chart here looks compelling to me. That's it for today, guys. Thanks a lot.